The beautiful thing about this article in itself and this topic about tariffs in itself is that we have the luxury of this being Trump 2.0. So we are starting off first with this article talking about, how tariffs might impact the Singapore real estate market. Okay, so it's a decent article, but there are some of the points that I don't quite agree, right? So before I come to my own point of view, let me talk about, let us go through about some of the points that was highlighted in this article. Okay, I'm going to just give you a very quick summary. So in the first period, they talked about how the Singapore real estate, Singapore GDP has grown over the last year, more than expected. Right, the ministers are coming out to kind of control expectations and say this year the likely GDP growth will be lesser than the previous year. Okay, but then again, what's happening in the real estate market doesn't quite tally with the potential uncertainties coming up. We have Parktown residences, right? This very quick summary over here. We go from 65% to 86%, 87% of the recent launches sold at PSS ranging from 2,300 all the way down up to 2,700 PSFs, right? So the whole purpose of today's session really is to kind of piece all these different articles together and try to kind of make sense of all these different articles, all the nuances in the market, right? This is the first article we're going to talk about. Later on, I'm going to talk about, the ministers coming up to say that HDB prices will stabilise, right? And in another article that comes up to say more and more HDB upgraders are upgrading into the private market, buying new developments, the percentages ranging about 30%, that kind of thing, right? So a lot of different opinions here and there. So now how do you kind of make sense of all these different data points for your own use, and how does that kind of relate to yourself? Okay, so now, right, zooming in. So again, right, when we come down to this particular topic about tariffs and how it's kind of impact the Singapore real estate market, there's really it can be as good as two sides of the coins, right? The first side of the coin is that with all these tariffs, right, it raises a lot of uncertainty, right? Slow down global trade and everything kind of trickles down into job uncertainty. People lose their jobs, unable to finance their loans and that kind of thing, then it's going to have a trickle-down impact on the real estate market, right? That's like the direct kind of, the kind of impact that everybody expects, right? Or it's the very first tier, first layer kind of thing to everything, okay? Right, people typically upgrade because they're confident with their job prospects, yeah? And so with the rise of pessimism over prospects, global uncertainty kind of thing, it will, the journalist, the reporter is expecting, home buying sentiments to come down. Right, increasing economic protectionism will also cause tit for tat kind of thing. In turn, right, interest rates may face upward pressure as central banks try to combat inflation. Okay, so this is the one point in this article that, again, right, I'm not an economist, so I don't profess to knowing every single thing about economics, right? But based on what I'm seeing right now in the market, right, this particular line doesn't quite tally with if you follow the news on the Fed, right? When Trump first came up, he said that he will make the Fed lower interest rates, okay? The Fed came up to say that initially, right, the initial response to that, the Fed was saying that they will likely keep the interest rate decrease, right, or flat this year, if not, slightly. I believe they said they will continue their course regardless of what Trump says, right? But now Trump come in, bam, and say tariffs, right? We don't yet know what's the direct impact on the economy. Of course, there's the textbook reply with that it will cause inflation. Now, with this inflation, right, you can talk about two things, right? First, you have to increase interest rates to fight inflation. But then the other way to look at it is that if inflation causes economic slowdown, the direct result would be the Fed reducing interest rates to combat the economic slowdown. Okay, so now which one will be greater and that kind of thing, Nobody really knows, okay? But if it swings in the side of reducing interest rates to combat economic slowdown, that will be a plus point for real estate, right? Plus point for property. Lower interest rates, property comes up. Now the thing is, I'm not sure whether you all follow the channel or even if you do your own research, right? ChatGPT, Google nowadays, so good, right? You can go and Google what's the correlation between interest rates and not global real estate prices, Singapore real estate prices. Go and just ChatGPT it or Google it, right? Very, very little correlation. So now that's interesting. So interest rate potentially can go up, can come down. But if go up, very little correlation. Maybe volumes come down, price increase slows down for Singapore real estate, right? But if interest rates come off, the increase is a lot more. How do you make sense of all this? Why is it as such? Okay, because when interest rate go up, do people pull their money out from the real estate market? Not so, right? They continue to hold onto their properties. Okay, and what they do, they take their cash and maybe they invest it elsewhere, right? In the recent years, they invested in T-bills, they invested in Singapore saving bonds, this and that. Okay, but when interest rate comes off, which is kind of what we are seeing, right? This is an effect that really not many people notice in the last quarter. As T-bills come off, Singapore savings bonds comes off, fixed deposit rates comes off, a lot of equity. And we are talking about, the Singapore household balance sheet, about $600 billion in liquid cash, right? Cash equivalent. That flows back into the market looking for best returns, okay? And a lot of Singapore, Chinese, dominant Asian mindset, a lot of it tends to flow into real estate. I can give you a kind of real life example of how this has kind of impacted the market, right? Because we ourselves, we have served quite a fair bit of clients that purchased Alta, Parktown, the Ori, okay? If I can give you a rough percentage of how this works, let's say 1 to 2 years back, right? Just 1 to 2 years back. Let's say out of 10 clients I serve, probably only 1 to 2 are looking to purchase in pure cash. That means don't take loan, purchase in pure cash. Okay, in this recent batch, I'm just quoting this tree development as an example. Out of 10 clients, 50%, a good 50% are looking to purchase it with pure cash, with no loan. Okay, so that number has actually spiked, and you're not going to see that research and that information anywhere recorded down. I don't think so, not so much, right? But that is my own personal experience with the clients that have bought these developments versus the clients that have bought developments 1 to 2 years ago, right? And interestingly, what goes behind this utilization of cash for purchase of these properties? Are they speculative? The answer is no. Okay, if you can ask me what's the one word behind what these guys are thinking, right? Legacy is a big thing. Legacy, right? Parents passing down the cash for their kids to purchase these properties. Diversification is another thing, right? I do have quite a fair bit of clients that have made money in either stocks, crypto, right? Another big one, right? Made money from there, are looking to diversify, okay? And the thing is, right, kind of this is the difference between clients that are well-to-do and they really know their stuff, right? They are pragmatic in terms of how they look at real estate investments, okay? They are not looking for it to double and that kind of thing, right? They are looking for it as a diversification means, legacy planning means, they do know that it's high, that current prices are high. I mean, there's no other way to look at it. Current prices are high, but why do they still buy into it? Okay, it's a hedge against inflation. It's a means of legacy planning. It's a means of diversification. Okay, so that's what goes on behind the minds of these people that are buying in a lot of cash, right? Good to give you guys some insights, because if not, a lot of people are like, wow, very rich, speculative, bubbly, right? A lot of bubble, a lot of speculation going on, right? It's a bubble that potentially bursts. As a matter of fact, the higher number of people buying in cash means the leverage is lower, means the holding power is a lot higher. Hence, coming back to my initial point on the low correlation between property prices and interest rates, okay? Now, coming on to my next point. So this is the other thing that I perhaps don't quite agree, right, when it comes to this article, right? So in the next parts, right, he kind of broke down the example, right, of how increase interest rates will kind of impact the real estate market and whatnot, okay? So then very quickly, right, continuing talking about the global uncertainty and whatnot. So then he said in the longer term view, right, Singapore homes have been a great for locals to build wealth, right, in the first 60 years of the country's independence. Going forward, many locals can expect to continue banking on home ownership to build wealth. Many start their home ownership through the HDB selling and upgrading, that kind of thing, right? He kind of gives an example of how this is done, right? Still, home prices have risen substantially over the years, having a condo unit double, treble in price when entry prices were 600 PSF. It's much easier compared to 2,400 PSF today, right? Add this to the tougher economic backdrop. By being innovative, Singapore can earn a good living through being useful in the world. Nevertheless, Singapore will not be immune to what's this word? Pernicious, something like that. Anyway, effects of slower global economic growth. So, like what I mentioned, right? Is it a given that interest rates will come up with tariffs? The answer is no. Okay, and the beautiful thing about this article in itself, and this topic about tariffs in itself, is that we have the luxury of this being Trump 2.0. This is not Trump 1.0. He did basically the same thing in his first time as president. And if you really want to go and do your research, if you look at how property prices, interest rates kind of played out previously, there's a little bit of difference. So number one, if you track property price movements, it did in fact come up. Okay, between his previous presidency, 2017 to 2021, right through COVID. Okay, of course, prices spiked closer to the end of his term, nearer to COVID, okay? I think credits, right, to Stack Homes, they did do up an article like that. Quite a brief one, nothing in particular. Maybe I'll do a more detailed video next time comparing and breaking down some of the nuances between Trump's first presidency versus the second presidency, okay? For that purpose, right? But the first thing first, the one thing I noticed difference is that in his previous presidency, when he first came in, right, interest rates were on the way up. Okay, you do notice interest rates were on the way up. Okay, but even though, right, I think it was on the way up, hence, prices were pretty moving sideways in the first couple of years, 2017, 2018, 2019. But the more important thing to note in that period of time, in my personal opinion, was kind of the oversupply that was flooding the market, 2017, 18, 19, right? It was the period of Affinity, Riverfront, right? The government didn't really release enough private land previously, okay? And, we had that en bloc surge, the GLS surge coming in 2017, 2018. In my opinion, that was one of the things, right, that caused prices to kind of move sideways. But if you bought developments during that period, you would still have been sitting on pretty decent profits, right? So now that's the other things. COVID aside, I firmly believe COVID aside, you bought anything during that period, right now you'll still be a lot better off. So now that's kind of the first thing to take a look at, right? So the here, right? Actually, people say a lot of uncertainty and whatnot. In my opinion, we've kind of been through it. Okay, so you can roughly guess in a certain sense, right? But if you go down into a deeper level, again, right, Singapore real estate market is very much dependent on what the government does in Singapore, right? So for those of you who are looking to enter the market and whatnot, right, me personally, I'm not overly concerned with this whole tariff situations and whatnot, right? Come down to the fact is that what's going to happen in the Singapore real estate market? What's the supply-demand dynamics underpinning the Singapore real estate market? I think that is a whole lot more important. Okay, whatever interest rate shifts in the global environment as a function of all these tariffs have more upside impact on the market if it comes down, but if it comes up, the impacts of the Singapore real estate market is not that much. We've already seen it in the last couple of years with interest rates coming up. Has it caused prices to fall off? The answer is no, right? Prices have still continued to come up, right? That's really a very quick summary on my thoughts of this article and how I feel this whole tariff situation will impact the Singapore real estate market.